Hello, ladies and gentlemen, and welcome to what I'd call episode 26. And this is, as usual, Kenya's Market Map, weekly podcast, business, finance, East Africa. You know, we give you the in-depth analysis of what's been happening on a weekly basis. My name is Kigen Kiplimo, and today I have someone who is a bit early today.
This is Daniel Kalia.
Good to see you, Dan. It's been a couple of weeks since we put out an episode.
Yeah.
I think 3 weeks, if not 2, right?
We've missed 2 weeks.
Oh, yeah. 2 weeks.
We missed two weeks of not recording.
We were actually on a workshop / vacation.
Yes, where it was decided that because Easter makes a lot of bad jokes, he shall not be allowed in this episode's recording.
Yeah, so guys, what we were doing essentially is we had gone into hibernation mode and to restructure the podcast and to come up with new segments and and we've always received comments from you guys, and now this was time to sit down and see how we can incorporate the comments, you know, the things that you'd want us to add into the podcast, subtract into the podcast, out of the podcast. So we were taking that into account. So today what we're going to do, we're just going to have a conversation with Dan about what has been happening in an unstructured way, really. And so Easter Fanning has extended his vacation, and actually thanks to Easter's employer, the boy has seen the shores of the Indian Ocean.
It must be nice. It must be nice.
Yeah, so Easter will be joining us next week. He's just gone for, Q1 is over, so they were seeing how to structure for Q2. Yeah, so guys, tell us, of course, in the comment section how you're feeling, how you guys have been doing. Remember, as always, on Twitter is at marketmap_KE, LinkedIn Kenya's Market Map. You can also find us on Facebook at Kenya's Market Map. Also, guys, check out our website. It's going to be upgraded very soon, kenyasmarketmap.com. Good things are coming there. Like, share, and subscribe. Dan, so how have you been, man, in the 2 weeks that we haven't seen each other?
I have been well. I have been okay. Just, of course, it's the usual, a lot of work. It was my birthday on Monday.
Oh, so, happy birthday, man. I didn't wish you a happy birthday.
Imagine.
Dan is normally late for the podcast.
So
it's hard to wish you happy birthday.
But yes, I think as we move forward,
highlight, man, eh? What has stood out for you?
Other than me turning a year older?
Yeah.
I think there was a lot of earnings week for banks.
Yeah, banks has been big.
And it was something we were to cover when they came out. But I think the biggest standout was Standard Chartered's dividend payout,
wow,
which was, I think, their highest ever.
It just had to be dividend.
Hey, 14% dividend yield, my guy.
I think the payout ratio was I think around 80%. Yeah, they've joined BAT on that front.
So I think that is what that's when you've asked the question, that's the first thing that's just come to my mind. Yeah.
That really stood out. I mean, now going into the conversation about banks and results that are coming out. I mean, Equity Bank, of course, I mean, top of mind, impressive. 40 billion PAT. I mean, wow. I mean, nobody has ever gotten to that. They're trailblazing, as it stands. We had KCB coming second at 32 billion PAT, and banks have really, really done well. NCBA, they did around 10B. Barclays, ABSA now, they're doing around 10B as well. We are having Standard Chartered. They did, I think, around 9B. We had, of course, Stanbic doing around 7B. So banks really, really did well. Oh, Cooperative Bank, they did 16B. Really, really did well. So I mean, and this is something that is reflective of course, the half-year results and the and the Q3 results that we were talking about in the previous episodes. And this was very much expected. Very much expected. A rebound of the economy.
Yeah. So that's the question I wanted to have. But before I ask the question, because the question is, is the bank's performances? Is it a true reflection of how the economy is performing, or do you think there's a split?
In textbook terms, it would be reflective, but in this particular case, it's not reflective, and it's simply because there is a battle. There is a battle between the government and the private sector for the bank's loan books, and we know who gets the lion's share of that. So even if you see PATs, going doubling, 100% plus, they are going up, but these profits are coming from who? They're coming from the government.
Yeah, and I think even now,
so touching crowding out.
Yeah, touching on equity, which you said posted the highest.
40 billion.
Yeah, for them earlier, James Mwangi had mentioned that they do not want to be a lazy bank.
Yeah,
and that they're going to reduce their allocation to government bonds. But yet again, the allocation to government paper actually increased.
Okay, he made that statement. I'd say he made that statement 3/4 into the year. So probably let's see in this financial year there'll be a change.
Okay, so it's too early to judge them.
Yeah, and because he was saying that they don't want to be a lazy bank that takes money from depositors and puts it into treasury bills and bonds.
Yeah.
Yeah.
So okay, let's see then this year whether they'll actually follow what they say,
but it's not indicative 100%.
Yes.
There is growth here, and I mean one thing that actually came of interest to me, and this is something that was actually came out. So the MPC, the Monetary Policy Committee of the Central Bank, held a session, and one of the things that came out from the MPC is that the provisions, loan loss provisions, have actually increased by 1.3%. And for me, we saw a lot of provisions in 2020, and understandably so because of COVID. Now, towards the close of the year, 2021, loan loss provisions increased.
Yeah.
So does that say something that probably since we, there was a rebound, now we are sort of like plateauing and almost going down a bit?
Yeah, but also it could be that
1.3 is sectoral. It's a whole sector.
That could be a reason, but also there has been an increase also in lending to businesses, I think.
Yeah, I mean,
guys, so because
loan
more, because more guys are getting loans, also it makes sense for the provision also to go high.
Actually, I had not looked at it that way, because loan loss provisions are a factor
of your outstanding loans.
Yeah, it's like if you increase your production, your overhead costs are gonna go up.
Yeah. So.
Yeah, makes sense. But I guess now the 1.3% margin is, well within the line.
Yeah, it's not a big change or sudden change.
Actually, it is expected. It is expected to be at that rate, because we saw, banks, most of the banks double digit, of course, except Standard Chartered. And we saw this also during the half-year results.
Yeah.
Of course, looking at how the bank is structured and the clientele, they are not, their risk appetite is not as huge compared to other banks.
Yeah. I think just banks generally are trying to be as risk averse as possible.
Yeah.
I don't know whether it's part of the strategy of trying to push the CBK to be more accommodative of risk-based pricing, so that they can be able to charge retail customers higher than what they are currently meant to do now.
Speaking of charges, I noticed something. Do you know that I was actually very impressed with Standard Chartered and their non-funded income, in this case, non-interest income. They are really doing good, eh?
Yeah, I think.
They're really, really doing good. And at the back of this is something that was published in the Business Daily, I think in 2019, that the most expensive bank account to service is a Standard Chartered bank, Standard Chartered account that costs 17,000 Kenya shillings every year.
Oh yeah.
So the charges that they've set up, of course, sometimes as if you hear 17,000 for a whole year, to service that account. But again, of course, people just look at the 17,000, but then they forget the services that come with the 17,000. So non-interest income there was really good. The lion in the savannah, I am not happy with the non-interest income. There, I mean, a lot of work needed to go there. And I mean, I was listening to Lawrence Kimadi, the CFO, say that a lot of work really needs to go there. That the non-funded income is not their strength points. And, non-funded income, actually, what it does, the importance of it is that it lowers it's sort of diversification of portfolio. Because in the event that you're not lending out a lot, you still have income on this side.
Yeah. I think that's why, again, going back to StanChart, talking about that account, I think they call it the all-in-one account. Usually the benefits include, especially if you're doing RTGS transfers, whatnot, like they're actually free. Like as local transfers are free. So if you actually think about it,
it's like you're saving.
The amount that you would have paid, assuming you have a lot of maybe standing orders, to your SACCO, to whatever. If you have those, then those payments those charges, if you offset them, you might find that what you would have spent is actually lower. But talking about diversifying, I think StanChart are trying in that sense. Recently they launched the money market fund.
Yes, and it was in the market map trivia.
So working together with Sanlam, they launched a money market fund. And I think, of course, they are getting is it a 1% commission that they charge?
Oh, that's affordable. That's
as an admin fee. What they charge when you open a money market account with them. Then the minimum you can invest is 1,000 bob. So trying to make it possible for guys to invest. And then it's quite, because even for me, I actually just put some money in the market. In the money
you
market.
open an account there?
Just to see the process, how it's like. And it's very seamless. Like everything is on your phone. There are no papers to sign, no forms. You go scan.
But that's because you already have a StanChart account.
Yeah. But even opening a StanChart account anyway, you don't need to go to a bank.
Okay, I'll get a StanChart account and see for myself.
It's literally, you can open a StanChart account now on your phone.
Okay.
And I think they usually organize for your ATM to be sent to where you are. So that whole process still, from getting an account to opening that account is easy. Like no forms, you go scan your details, you wear what I'm not totally sure of is if you need the money, how soon you can access it. I think they said,
because for me I use CIC Money Market, and withdrawal takes 2 to 4 days. Mostly it takes 2 business days, and the money is in
because even for me,
your current account.
Because for me also, I was also at Nabo Capital. For them, similar thing.
But there is Saiton. You can.
Saiton is immediate. Star 827.
Just
is that the code? I don't know the
I'm
code.
not sure 100%. Easter would know.
But alas, he's
I mean, looking at the banks now, that something interesting that I came across, that a number of banks are looking to open new branches. So we have DTB looking to open 20 branches.
Oh, it's 20, not 40.
Yeah, 20. So we have NCBA looking to open 12 and Cooperative Bank 17, and this is in the span of 2022. Coming back to DTB, Finance Twitter has been crazy about DTB, and this is because the share, I mean, we had DTB as our stock of the week. I think around the episode
it was among the first ones,
12, 11, around there. You can always check that out. And the thing that, DTB, the share price has been crumbling. PAT has not been doing well. And now people are starting to raise concerns about the management of DTB, because the CEO has been there for over 20 years. The board, they're looking to see, I mean, what new thing will DTB present? Because are DTB going to do a share buyback, because people who hold DTB, the stock, are concerned. And if you look at their counterpart in the Aga Khan umbrella, You look at
Jubilee.
Jubilee issued a special dividend. I mean, on top of an interim dividend and a full dividend.
Yeah, because the special dividend was 5 shillings per share, I think.
Special dividend was 5 shilling. The final dividend was 8, and the interim was 1, coming to a total of 14. And I suspect, I even posted this on social media, that the special dividend might have been because of the Germany fact, the Allianz.
Yeah. And again, you remember we
have also had Jubilee as our stock of the week.
Yeah, we've had Jubilee as our stock of the week. And I think at that point when you're discussing the issue of payouts.
Yeah.
Or was it when you were discussing
payout? Oh, wait. It was it EABL or BAT?
Is it TPS Arena? Which was the one that
TPS.
has a shareholder with 84?
With 84%?
Yeah.
Oh, why am I forgetting?
Which business was that?
Flame Tree.
Yeah, Flame Tree. Yeah, when we were discussing the dynamics of dividend payouts, when you have one person with a good shareholder who's locally based, as opposed and compared to companies that have an international shareholder, how for the company, case in point BAT, when you have a bigger shareholder who's not in the country, they tend to have a higher dividend payout.
So we were talking about, I mean, BAT was one of them. That's normally in that scenario. That's why you find ABSA as well.
Yeah.
Because they have to pay to
even now
Stanchart. It's really indicative, really indicative.
Yeah, it's interesting.
And you find that now Jubilee, of course, pays dividends to the Aga Khan Development Network. GTB is also supposed to be doing the same thing.
Yeah, but I don't know why. But you see, I don't know whether it's because the Aga Khan, because for me, the thing that I can point as the difference is Allianz coming in.
Yeah.
Although Allianz, it's not like they took up the entire business.
It was just general
insurance.
Yes.
Yeah. But I think maybe part of the agreement was the dividend payout maybe to be relooked at and that kind of thing.
Dan, let me take you somewhere. Speaking of general insurance, we have seen that resolution insurance. This is actually from my end. I don't know from your end. From my end, this is unverified reports. All I've seen are pictures on social media.
Oh, the one of auctioneers.
That they were auctioned. The thing that I know, and this is a conversation that I had with some players in the insurance industry this week, including the regulator, that Resolution has been struggling financially
for a while.
no doubt. And this was after it was sold by the owner. It had a previous owner, Nduati, who used to own Resolution Insurance and sold the business, of course. Now the business is having issues, okay? And the thing is, they have not been paying the hospitals. So they have a huge debt with the hospitals. So that's one problem.
I think there's a point where most hospitals even stopped accepting.
Even on social media, if you search Resolution Insurance, I mean, people are raising red flags. Don't take up the medical cover.
Me, the biggest red flag, I think, was...
And there was a time you asked about it, on Twitter.
On Twitter, but also towards the end of last year, I was looking for health cover, health insurance cover. And I reached out to a friend of mine who was working at Resolution at the time. And
he told you,
even her, she was like, let me recommend you. Let me give you a recommendation of places you can look for health insurance.
I'm sure our listeners and viewers would love to know places that you were recommended to. I guess Britam is one of them.
Actually, no.
Oh, okay. You were recommended to?
Britam wasn't recommended. Of course, Jubilee, UAP, AAR. I think those were the top three. But then I also got quotes from Madison as well.
So I guess you picked Madison.
No, I went with AR.
How's the experience so far? Customer feedback?
I have not been sick, thank God. So
good stuff. Maternity?
I do not necessary.
Okay.
But weirdly, they were not covering for COVID.
Most of the companies weren't. And here's the thing: when COVID broke, most of the companies walikuwa wamekaza that WHO declares COVID as a pandemic, because once it's declared a pandemic, the rules of insurance strike it out. So you can't, and the thing is, because information hasn't come out, it's a pandemic, it has just come out. There hasn't been a lot of information, people are still thinking about, even the measures, how do you contact this thing? Is it by air? Is it by what? Is it by contact? how you contract it. Now, most of information hadn't been given. So what insurance guys like to avoid is uncertainty. Okay, not knowing what will happen. I know that's the base of insurance. I mean, it's about risk. But then now they're actually covering.
No, because for me, I remember when I've
seen a number of companies that have come out with a package that is inclusive of COVID simply because information has been known about COVID, that if you get COVID, these are the meds you can use. This is how much the meds cost and everything about the treatment.
Yeah, so for me, I think even the COVID test, they told me the COVID test would not be covered. Which, I don't understand why, because if I have an outpatient cover that has a limit,
you should take
then it will just deduct it from the
total,
limit.
If you finish your limit, it's done.
So I didn't really understand that, and I was not very happy about it. So that's my customer feedback.
If you come to the modeling of insurance, it's crazy. It's crazy, bro.
Yeah, so I was told they wouldn't cover so they didn't cover, so I had to pay for the COVID test in cash. And
which ilikuuma
sana, but it's fine.
Do you know what? Speaking of general insurance, so this week it was reported by Citizen TV that Resolution Insurance have decided that for the next 90 days they are not issuing policies for general insurance. And this is because of the financial issues that they're having. So that's why I'm saying the thing about them being auctioned is unverified claims. I've just seen it.
Even I saw the pictures. I haven't seen.
It could be pictures from anywhere. This country.
Yeah, but I don't know. I don't know whether they'll be able to recover from this.
The biggest issue, the biggest thing they are losing here is not even their financial stability. It's actually the customer paranoia.
Yeah.
Now, since you've had this about Resolution, bro, I'm telling you, if someone is to tell you to advise them on which medical cover, you'll be like, I don't know a lot, but I know that you should not take Resolution. So that perception, that's their biggest loss.
So that's even exactly my thought. I don't know how they would come back from this unless I only feel like it's unless there's a new investor who comes in to try to give.
They're actually looking for a cash injection.
To give the people the cash injection. But I also think even hospitals will still be wary.
About absolutely
taking them back.
I know one hospital owner who Resolution owes him 20 million Kenya shillings.
Yeah.
And the if you talk to him, the what is it called? The odds, not necessarily the odds, like how forthcoming they are in paying. Like it's not very clear because they're having financial issues. So and if that person is to re-enlist, and have like people who have the Resolution Insurance come to the hospital and get services, would be tricky, man. Very tricky.
Yeah, and now speaking on insurance generally, the last week I had a meeting with a business owner who runs diagnostics clinics, your x-rays, CTs, blah blah blah, all that kind of thing. And I was surprised they do only take cash, they don't take insurance. And I asked why.
This person runs a hospital.
It's a clinic.
And they only take cash.
It's only cash, no insurance.
Okay, when you say that, Dan, even before you continue, in my thinking, mtu amejifungia sana biashara, because today if you don't have NHIF in your clinic, you are missing out on a lot.
Yeah, but now the thing is, apparently for you to get listed,
you have to pay 1.5 mic for NHIF, just for NHIF. For you to be listed by NHIF. And that process currently, it's hectic. I've been doing some work around that.
So it's apparently it's a hassle, and
it is.
This person does not want those hassles.
And you know what the problem is? You see today, if the way you have, if Sun and Shield was a hospital, and then you open another branch in Eldoret or just next in, let's say, you open another one in Kampiamoto. Do you know, for that clinic in Kampiamoto to be listed, even if you have this Sun and Shield in Kabarak, they're treated separately. 1.5 mic there, 1.5 mic here, for them to be listed in HIF.
As in,
crazy.
I feel like that's a lot. Why? Why? But anyway, but apparently even for the private insurance companies also, it's a bit of a hassle also to get listed.
Yeah, okay.
Guys are asking for, I don't know that's kickbacks or whatever.
To smoothen the process.
Yeah, which is, I'm very surprised. I was expecting that for NHIF, to be honest.
Yes,
that does not surprise
government.
me. Yeah, but I was very surprised that private insurance.
But for me, I mean, I would be, for corporate, I mean, corporate is unforgivable, because if I'm Julius Kimgetich and I'm hearing that someone is taking bribes to list a hospital somewhere, I'm going crazy. Someone is going home, bro.
So I was very surprised to hear that, because, but anyway, I don't think it should be that hard. Businesses, again, goes back to the whole process of running a business.
that we talk about.
Because you're losing a whole portion of clientele.
Because today, and this is, so let's just look a bit, take a look at the Equity Afia model. Okay, so Equity Afia has all the insurances, including Equity's insurance they have Equity Life Assurance, but now Equity as an agent to underwriter. Mostly Brita. You know the connection. Now the thing is, they don't have NHIF. They have all the other insurances. And Equity Afia, the model is that they go into areas where there's high population, and then they get a lot of numbers there because their services are subsidized a bit, and they're having a huge challenge because they don't have NHIF, and the biggest insurance in Kenya is NHIF. So they are missing out on a number of customers. Of course, the reason behind that is to be able to promote their own brand. But still they're missing out.
It's the interesting thing about NHIF, and I think part of the reason why NHIF suffers. Okay, if you're to look at the statutory deductions that go to NHIF if you're employed. And that side, usually the employed people, usually that
for you pay NHIF and you still have your own cover.
Yes. And a number of, because in my previous employment, it was the cover was with UOP. But if you go to a hospital, they first deduct from NHIF and then
UOP
do your UOP cover. But the thing that I was saying was, outside of the employed people, when you're looking at people who are actually just voluntarily looking for cover and they go take up NHIF, most of them tend to be the people who actually require NHIF services. So you can't pay, it's usually 1,500 to start, and then I don't know if the rates have changed. And then you go get your treatment for X. You go get your treatment. Then once you're well, you stop paying NHIF. So for NHIF, they end up, the premium that you've received compared to the claims that they will get, there's a big
and then the thing is, so today if you stop paying NHIF and then you come and repay, and you come back to the paying scheme and you start paying, it will take you 3 months for it to sort of mature so that you can start accessing it. And I think one of the biggest motivators to people taking up NHIF is when giving birth, because that has been a big issue for many young couples and families who are not really financially stable. So because if the lady is going to give birth and it happens that they require today, okay, thanks to the Jubilee government, you can give birth for free, okay, with or without NHIF. But the thing is, if it happens that they require C-section,
even before Jubilee government, you can still give birth for free.
Okay,
just that the pain levels and management of the whole thing.
So if they in any event you need C-section, that's when now it gets upwards of 70 GC. But then now with NHIF, it's free. So if you talk to many young couples and guys in their 20s, the biggest motivator is, hey, when giving birth, you really need that NHIF.
It's very important.
So Dan, I think there's something that very, very interesting that I have to big up for the 2 weeks that we were not around. There is CMA. Sorry, I was about to say CFA. CMA, Capital Markets Authority, has the sandbox where businesses that sort of have a new model, a new product in the market go through. Where they're regulated, they're checked and everything before it's released to the market full scale. So we have Robo Advisor. I don't know if you know about Robo Advisors.
I remember reading something about it.
Yeah.
But you can tell.
Yeah, so we have Robo Advisors. So first of all, there's a company called Forefront Management Limited who went through the sandbox, and so this is the first Robo Advisor product that's coming into the market. And essentially, what Robo Advisor is, it's a software that uses analytics and algorithm and AI, okay, artificial intelligence. So, for example, Dan, if you get into a Google form, you fill in the details about your financials, probably this is how much I earn, this is how I spend, this is how I do. Using that information, it will give you a financial plan. It's going to give you financial advice. So whether it's on saving, whether it's on investing, this is how you're going to do it. So I mean, it's like, you see financial advisors, but then now it's going to be on AI. So it's really interesting. This, of course, has been available in the US and in the West, I think, from 2008 and even probably in the early 2000s. But then this is the first time it's coming to Kenya. Really, really interesting stuff.
Yeah, it is. I'd be curious to see how it's.
Yeah, I'm gonna definitely check this out just to see how it's working. We've always seen, of course, the 50-30-20 rule and many other things. Yeah. And so this time now we are going to have Robo Advisors and to see how it's playing. The personal finance space over the past, I'd say, 5 years has really grown a lot. We've seen so many players coming in and so many Kenyans taking up courses. We've seen content on Instagram, on TikTok about personal finance. Well, here's Robo Advisors. Check them out. The company is known as Forefront Management Limited, so check them out and look at them.
Interestingly, about this personal advice space, it's taken me back to going back to StanChat and what they're doing. So when you have the StanChat,
how much have these guys paid you for this episode?
They should. You have my details. So what they do in their app? They do have an investment option, where you can set up like your investment profile, and they try to determine your risk tolerance levels. So out of curiosity, I wanted to fill it out, and when they tell me how risk averse or maybe not risk averse,
probably they'd use that when issuing your credit.
But I didn't finish. It was too many questions. But they have questions on your level of knowledge on this finance products, money markets, exchange traded funds, blah blah blah, all that. Then there's a section which I don't remember what questions there were, but I just didn't have the time at that point to get into it, so I didn't finish it. Maybe I'll finish it and see what my profile is.
Done. So let me try you out. Market map trivia. So this market map trivia,
you can prepped.
Actually, today I didn't come up with the questions. Okay, so just helping out our listeners and viewers. Always new things when they come up. We always tell them about it. So there's a company known as ShareHub, and what ShareHub does is that you can find quizzes there. You can invest. It's an app. Check them out. So today I'm gonna test Dan borrowing questions from ShareHub. 1. And today I'm just going to give you 3 questions, not 5. Okay? When is it officially... So this is question number 1. When is it officially a bull market in the stocks? A. Let me repeat the question first. When is it officially a bull market in stocks? Choices. A. When a broad market index records a 20% gain from its previous low. B. When a major market index hits a record new. C. There's no official definition. D. When the analysts stroke pundits of the major news channels announce so.
A feels like the correct answer.
When a broad market index records a 20% gain from its previous records. That's your answer?
From its previous... What was B?
B, when a major market index hits a record new.
A feels correct.
A feels correct. Okay, even I don't know the answer. So I'm currently in the ShareHub app, so I'm just going to check that out to see if you got it. Accomplished, correct answer.
Yes.
Oh, okay. Let's move to the next one. All right, question number 2. This I think much easier. The question says, profits made from investments are reported as profits made from investments are reported as option A, capital gains, option B, capital losses, option C, bull markets. Do I need to give answer for D? Yeah,
Capital
D,
gains.
bear markets. So the answer is capital gains, of course. Yeah, good, correct answer. You got it. It tells you that. Question number 3, the last question. We're just gonna ask 3 today. Which terms most accurately describes selling shares at a higher price than the price at which they were bought for? A, profit. B, dividend. C, loss. D, asset.
Profit.
Unajishuku? Yeah, of course you got it. 3 out of 3. So I mean, these questions are gonna help you learn a thing or two. So once again, check out ShareHub. They haven't paid me. No, it's just some good friends and good insights, things to check out. It's called Jikuze Quizzes. So check that out.
Yeah.
Anything you wanna try me on today?
I didn't. Give me. Maybe do they have more questions?
Yeah. Today, this is a mini podcast. So this is while we were away. Of course, new things are coming up. Following from episode 26, new segments coming up, and of course, the comments that you've always been giving us, we're going to incorporate them now and be able to restructure our podcast even more. Remember, you can always find us on Twitter at @marketmap_KE, LinkedIn Kenya's Market Map, Facebook as well, Kenya's Market Map, and of course check out our website kenyasmarketmap.com. You found something? Try me.
That's what I'm trying to next.
Okay,
let's see whether there's a question.
Of course there is.
Okay. Which activity is most likely to increase shareholder value? I'll repeat the question. Which activity is most likely to increase shareholder value? A, minimizing the company's cost of capital. B, financing the company's business with expensive debt. C, maximizing the amount of corporate assets. D, investing in projects that are always the least risky.
Which is going to increase the shareholder value?
Yeah.
A was?
Minimizing the company's cost of capital. Then B was financing the company's business with expensive debt.
Nope.
Maximizing the amount of corporate assets.
If you maximize asset,
then investing in projects that are always the least risky.
Actually, I have a dilemma. Oh, interestingly so. Okay, investing. So if you invest in projects that are low risk, does that 100% guarantee that shareholder value is going to increase?
At this point, I think the listeners should just go take some water.
I'll just go with A.
Yeah, A sounds correct. I think it is correct. Should be correct. Because minimizing the company's cost of capital, it means you're reducing your finance cost.
Because we've always talked, how I'm normally big on finance cost of businesses.
Yeah. And so minimizing the company's cost of capital, that's the correct answer.
Yep.
So financing the company with expensive debt, you're just increasing your finance cost. Yeah. Maximizing the amount of corporate assets. I don't even know what they mean by corporate assets.
When you say maximizing corporate, so when you maximize, it means that what you're going to do is like you're avoiding situations where you have dead asset or idle asset. You remember the issue that we're talking about Nairobi Hospital and the fact that their laundry equipment, they're using it for commercial services outside their own cleaning. So probably that's what they mean. But then it's not 100% convincing.
I don't know what they meant by that. Then investing in projects that are always the least risky. This means a less risky, low risk, low return.
Yeah.
So you're not maximizing shareholder value. Okay. That was a good question.
Yeah. So, Dan, before we wrap it up, what's new? Anything else?
No, nothing else. Shout out to Sun and Shield School. KCB results came out the other day.
Yeah, they did well.
They did very well. Mean score of 389, which is amazing. So if you have a child, just slide into my DMs at Daniel Kale on Twitter.
Okay, thank you so much, guys. I know this has been a mini episode, but we just had to quench your thirst for Kenya's Market Map. And until next time, remember, it's nothing personal. It's just business. Cheers.
Cheers, guys.